Friday, January 3rd, Stan Ehrlich market analysis. You guys know I start out with the stock market indexes and go to futures contracts and sometimes some other topics, cycles, seasonalities, and stuff. Today, we're in the process of getting out of our Santa Claus Rally trades that we got into on the E-mini and the SPY, essentially the same market, but not exactly the same. Uh, one day before Christmas, 2 days before Christmas, is three trading days before Christmas. Now, yesterday we had our first offset. Today we're having had our second offset, and Monday will be our third and last offset at 6:50 a.m. California time. So let's see how it's doing. The E-mini at the moment is up 57, 58, doing pretty good. Didn't look good yesterday. We had a bearish engulfing, but close to oversold. And I have sometimes called that a bass-backwards reversal. It looks bearish. It should be, but when you add the fact that the bearish engulfing is in oversold condition, and this was very close, not quite, it oftentimes does exactly the opposite of what it should have, probably because of the oversold condition. So the outside trading range is the key, in this case, not necessarily the closing direction. If we had closed higher yesterday, we almost had a green bullish engulfing like we did on the 20th of December, which was a great signal. It went up quite a bit on the next day, and then the next day even more, and the next day it held, then started to come down. Lots of opportunity, 1, 2, 3 days worth to take off a really good trade that we put on because of the bullish engulfing ER signal on December 20th. Now, we did not make a new low for the whole move down yesterday. So if you were inclined to use the ER1 overnight and or the ER3 overnight with a slow moving stop, you probably didn't get stopped out on the break yesterday. And obviously things are improving quite a bit as of the moment. Let's go look at the 1 minute chart. And this is a 5 minute chart, not the 1 minute. So the E-mini at 7:10 a.m. California time, we put on our first long position on December 20th, Friday. The next one, the same time of day, Monday. The next one, the same time of day, Tuesday, the day before Christmas last week. It was still good on Thursday of last week, climbing just a little bit more. Then it started to come down, and then kind of stabilized. And then we had New Year's. Then we have the day after New Year's yesterday when we made a new low, but not a total new low for the trend. And now today, after opening and dipping a little bit, we're up quite a nice amount, almost 6 points at the moment. So here it is. We got out of our first entry. We'll just use FIFO, first in, first out. And when we bought it at give or take a few ticks, 59.19 on the 30th, we got out yesterday, the day after New Year's, the first business day of the new year, at 59, almost 59.50, a little below. And it was at 6:50, I believe 6:50 a.m. Now, today we got out the same time, 6:50 a.m., a slightly bit lower, but the initial purchase was significantly higher, and that was a losing trade. So just eyeballing this at the moment, it looks like we're probably in the hole very slightly. One profit, one loss, and it looks like the loss is a little bit larger than the profit, but it's a nominal amount one way or the other. It's not breaking the bank or making you rich one way or the other. Our last trade will be getting out, of course, at the same time tomorrow morning. I meant Monday morning. And it is an open trade at the moment with a loss because it's the highest one we purchased the day before Christmas, the 24th of December. And that purchase was at 60.63 and changed, call it 60.64. And we need to get all the way up to and higher, excuse me, than that by that point in time on Monday. So I'm hoping for more rally today, a close that's strong, hopefully up something like, I don't know, 7, 8 points. And that'd be pretty good. And it would be above the high of yesterday and the day before yesterday, which the trading day before yesterday, which is Tuesday in this case, because of the holiday. And then it's going to be above Monday of this week. So we're looking at really a new high for the whole week. If I can get up to, 60 plus, 6,000, 6,000 plus. Okay, next. Spider, of course, December 20th was a fantastic bullish engulfing day for a heck of a lot of stocks, 50 to 100 or something. A very good day for our ER strategy, ER signal strategy. Now, yesterday was an outside down day like the E-mini, but it was extremely close to oversold, not quite. We are getting that rally, and we are now almost higher than yesterday's high, and that would be the day before also, and then we're very, very close to the high of the week. So the spider's moving up a little bit quicker, faster relative to the three previous highs, Monday, Tuesday, and yesterday, Thursday. Coming close. Probably there's more stops up here, buy stops, of course, and that should help it pop up a little bit more. So here we are up around 6. I am bullish in general because of this bullish engulfing on the 20th of December. And yesterday I was quite concerned that the market was going to be about to make potential new lows. But I think I described it pretty well yesterday. I wasn't quite ready to go bearish. And I was kind of hoping what's happening this morning is exactly what's happening this morning. It's coming up quite a bit. Here is the 5-minute data on the Spider SPY. Our first trade started here, same time, just a different number. Made 401 on the way up. We lost only a little bit, 25, on the second entry in offset this morning. And the last one, I should have turned this red, but didn't do it. It's a loss, and we need to get up to where the initial entry was, or maybe a little lower, because the first trade was quite nice, and the second one didn't lose anything significant. So on the offsets, we're up around 375 at this point. So if this closes with a less of a loss than 375, we'll be okay with a slight profit on all three trades on the average for this year. But if it closes higher with less of a loss than 375, we're simply going to be doing better this year for the Santa Claus Rally. Next, we've got the QQQ. Yesterday's low was a new low for a month and a half or so, but we're rebounding pretty nicely. I want to point out that yesterday's close was not below the previous low, and so there was a lack of follow through. Today we're bouncing back up again. I keep talking about that closing price being above or below previous important turning points. That wasn't below, so we didn't get the downside follow through, and now we're up 7.25-ish. And above the high of yesterday, and a little bit above the high of the trading day before yesterday, Tuesday this week. Looking a lot better. Gaining a little more confidence, but we still have the previous bottom of this upper slanting triangle to deal with, and we still have these previous important highs, 2 of them, before we get into total new high ground, which I do expect this month. Now, the 5-minute chart on the QQQ, doing pretty good. Don't see anything bad here. Kind of expecting to see new highs for this session. Yeah, one could draw a bear trend line across those highs. It might be useful. But the overall trend, of course, is basically up. Well, definitely up. So, what's in motion tends to stay in motion. The trend is your friend, blah, blah, blah. I'm hoping for new high ground in the next week or two. Next, NASDAQ futures double bottomed out. Tiny new low yesterday. Didn't close anywhere near it, the previous low, that is. And here we've got the bounce. So I'm looking for more strength. We'll see what happens. We got the 5-minute chart stalling out at a little bit of resistance right here at the high of the session, which was only made, like 30 minutes ago or so. So, I'm maintaining my bullish stance, but I really want to see more evidence, more upside follow through, more strength. So we're not out of the woods in terms of possibly turning negative, which I don't think we're going to end up doing, which means we will have closing prices starting to be below yesterday's low. And the YM holding double bottom over a couple of weeks, fairly small. Outside trading range day yesterday closing lower, but again, not below the previous lows of the break. And we've got a bounce. Not quite as good as the ones on the other indexes I just showed you, but coming up. And the YM 5-minute chart doing okay. Next, we have the bullish engulfing, or I'm sorry. Actually, it barely was. The close yesterday was 22.49.4, and the close the day before that was 22.49.8. So I'm sorry, it did close 0.4 lower, not having a bullish engulfing and at a bearish engulfing yesterday, barely. But all the other stuff I said about the indexes in the last couple of minutes still stands for this one, and we're getting a decent bounce so far. Not good enough, but it's got to start someplace. And here we are with the 5-minute chart on the Russell. Okay, bonds right now only up 2 ticks. I'm sorry, down 1 or 2 ticks. With Ninja, and you bring a chart up on the screen, you have to wait until the next tick and before the net change number updates. So we're down a tick. Now, Doji, I think it's bottoming out, had a bullish engulfing, didn't turn out to be the exact lowest low. We did make a new low by 1 single tick the next day. And so far, for 4 days, today being the 4th day, we are equal or higher than the bullish engulfing signal day on December 26th. I need strength. I want to close above 1423, 1424. Let's call it 15. And then we should be on our way up a few points more. And if we can continue to trend higher over the weeks to come and months to come, this will go down in the books as a very unusual double shoulder, head and shoulder bottom. The last shoulder is about 2 months late and a couple of points lower than I expected level-wise. But the body parts are here. There's nothing severely wrong with this. And the upside objective would be a whopping 150. And we're at 113.22. So maybe the last shoulder low has started. I really would like to see a sharp rally next week, and for that matter, the rest of the day today, which is probably not going to happen, in order to maintain those comments. If we don't get it and we start to close below the low of the break, then I'm going to have to look for a move all the way down to 107, and we'll see what happens. 10-year notes. So far, so good. Not great. The bottom day is a bullish engulfing ER buy signal on December 26th. The low. My signals. We have a trade for ER1 overnight and ER3 overnight that's making money in both cases. Not very much, but they're both the little tiny green trade lines are green. If they were red, then we'd be losing a tick or more. I want to see real soon, sooner the better, close at 109.06 plus in order to leave a couple of weeks of price action below us. Then we're going to challenge resistance areas and see how this does over time. The minimum upside objective on the 10-year notes, if everything works in the months to come, will be up to 126. Next chart is crude. Okay. Second day overbought. We're getting a little more follow through. We're going to test our major bear trend line, looks like. And because it's overbought and fairly significantly so, 84 RSI is not to be ignored. Last time we were close to that. Market topped out with a bearish engulfing. ER sell signal. Down it came for weeks. Last time before that, we were overbought at 81 or 2. It topped out again. How about just a week earlier? A minor high. How about when it got last time, and this is going back to April of this year, up to about 86, it topped out. That's why I love RSI. With high and low levels being reached My custom number is not Wells Wilder's originally 70 and 30, mine's 75 and 25. And I have a different look back time frame. And I don't draw the chart the same way he drew his line chart. This is a bar chart. And I use it a slightly different way than he used it. I learned RSI from Wells himself. Next, heating oil. Kind of the same as crude. Over about 3 days now, has resistance above the market. Not exactly the same kinds of resistance, but the same thing. So I think we're about to top out very soon and have a short downside correction. It's very, very important to see how this market holds. If it gets close to 2.12, if it can't hold that, then watch out. We're going to see a dive down into this major support area below 2.0000. Otherwise, it probably will hold a little bit lower on a dip down to 2.27, maybe a bit lower than that, and then start to work its way higher again. And I vote for that one, the friendly, slightly bullish commentary. Next. Hell yes, the gap is closed. I talked about that gap on December 30th when it gapped up like crazy. I think I said natural gas was apparently jumping because the National Weather Service said the East Coast was going to get colder in January than they originally planned or forecasted. I don't think the word plan quite applies. So here we are, done deal. Told you it was going to come down to 3.4 probably, and we have done that and more. So it's okay that it came down more. We're holding in a trend line here. That would be a good spot for it to hold and turn back up. Here's the thing. We were overbought at the top and in a major resistance area. And was that an upside exhaustion gap? So we're now topped out past tense and going to continue to work its way lower and lower and lower than we are now. Well, what it does with this particular price level is pretty important. Turning around would persist the upper movement, and I have an upside objective of 4.4, 4.5 because of the head and shoulder bottom that formed. There's our shoulder back on late August. There's the head of the formation early November, which by itself was a small head and shoulder bottom that worked very nicely in 4 days. Then we had a bearish engulfing, and that was November 22. You came down and made the last shoulder low or a combined shoulder, whatever you call it, but it's the shoulder. Broke the neckline, classic fashion. There's the breakage right there, the neckline, and a closing basis right there. Came down, held, started to squeak up a little, gapped up. Now we're back to the trend neckline right now. So this is traditionally, according to the textbooks, a good spot to be a buyer when it comes back and touches the neckline. The risk should be a very small amount under today's low, and we're still at, for all practical purposes, today's low. So if it doesn't work, you're not killed. And if it does work, you picked the turning point very accurately. Next. This head and shoulder top in gold, silver, and platinum, all three, are not acting correctly. I have got to put a serious question mark as to whether this pattern is legit or not. The neckline, I've said all along, slants downwards, a very uncomfortable downside angle. So although it's turning around a little bit today, higher high and current quotes lower on the day near the low, I don't see any major reversal developing. RSI doesn't give me much help. It's very neutral. The pattern still basically is there, but I keep telling you it should have kept going down after December 19th, and it didn't. It went back up a little sideways and then made a minor new high the last couple of days. It should have just kept sliding. Silver did come down, test the neckline, and even close below it. Oversold, not unusual. One way or the other, it just bottomed out, went back up above the neckline, which is a no-no, stayed there for about a week, and then tried to break out again a couple of days ago. And now, yesterday, rallied back up above the neckline a second time. Not supposed to do that at all. That's what's adding to my question mark as to whether this head and shoulder top in silver is legitimate or not. It's nice that we got a sell signal on the last shoulder high. That's great. But I don't know. I got to go back and forth here until things become a little bit more defined. A close at 30.50 or higher is certainly going to throw a lot of monkey wrenches into this head and shoulder. And I might just start to eliminate the neckline and the markers for the shoulders and head from my chart and abandon the concept. And what about platinum? Much like silver, it came down to the neckline, broke out, and didn't stay below the neckline like it normally would. And pop right back up again yesterday, and more follow through, a lot more follow through to the upside today. But it's at a resistance area. And if it crashes through the neckline in the next few days real fast, big time, then I've got to say, okay, it just had a glitch in it, and we're back to a head and shoulder top. Downside objective is going to be in the area of 793. What about copper? Copper broke below some support, closed below support, and today's coming back up to the top of that, what is now basically resistance level. So I think it's about to roll back down again. We were oversold for like 3.5 days, half day, meaning January 1st. There apparently was some minor price action. I didn't know that the darn thing was going to be open at all. Traditionally, it's not open on New Year's Day, Christmas Day, 4th of July, stuff like that. But, exchanges make the rules and they want more funds and they start trading 24/7, 366 and 25/8. They invent new hours and days to get more trading. So this looks like it's just simply going to die on the rally, turn back down to new lows. Next, we've got soybeans. Now, this looks like a possible double bottom, broad double bottom, and wheat has the same kind of thing. I just need to have any and all of the minor downside dips hang in there at around 979, 980, and turn back up and start to make minor new highs again. Eventually, of course, breaking the major bear trend line and then getting up to and through and above resistance levels in order to claim this double bottom from August lows to late December lows is legitimate. It's too early to really tell, but this is how they start developing. So you need to know what to look for in the early stages. Okay, too bad we didn't get any buy signals at the bottom in this one. And we still have the possibility of a broad, big bottom formation in soybean oil, but it's not behaving very well today. New lows for a few days, almost a new low for the whole trend, not quite. Well, I should say since September, October. And that's extremely close to the very lowest low, which would be at 37.75. So we're very close to some support. We're trying to bottom out, but this is not particularly encouraging. We're now at a new low and a new low close for 1, 2, 3, 4 previous days this week and Friday of last week, I suppose. Yeah. Just got to start turning around and heading north. Otherwise, the trend for the last couple of months is going to push it down to the previous lows and and create a downside breakout, and the bear trend continues. What about meal? Well, meal is collapsing today as well, so I'm not getting much help from anything grain-wise. Got overbought. Touched the resistance level yesterday, I mentioned. So I was expecting some sort of a dip today. No surprise. The size is a little bigger than I thought it would be, but if you were long, I sure hoped you cranked up your sell stops, protective stops a lot. Anyway, no sell signal, just overbought and resistance. The combination's one of my favorites. And we'll see how it handles 300 on the way down. Next. Excuse me, corn did have a sell signal a couple days ago. Didn't work exactly correctly. We made a higher high the next day. But now, all of a sudden, 3 days after the reversal day, we plunged a chunk. And now it looks like the reversal was telling you the market was trying to top out. But I like it when it's on a high day like that one, or our green buy signals on the exact bottom day like that one. Those are the ones that act the best, are more impressive, and that's what I developed the ER signal trading system to do. Pick the day. The market tops out or bottoms out for small, intermediate, and large moves. Next. Well, wheat, already a new low for the whole damn trend. When I looked at this earlier this morning, we hadn't gotten down to the previous lows. So now I'm going to have to do something like this and think that the double bottom formation is now in jeopardy. And it just is getting less and less likely. That's just getting too damn low. So it's got to turn back up again big time, start to close above 555 and even higher for me to call this a broad double bottom from August through December. It's just getting some serious dents in the armor here and may not pan out at all. Real concerned about that. If this does keep going down, it could go down quite a bit more, probably under 500. Next, real strong up day in live cattle. Now overbought for the first time in a little while, couple of weeks. Last time it got overbought, it topped out. Bearish engulfing, went down for approximately a week. Now, this overbought condition is very noteworthy because it got up to a little over 80. And we are now trading at almost the low of the day. We are at the moment right around the previous high closes and the previous highest highs. So overbought, new high ground, but the close didn't maintain a close above previous highs. That is a lack of upside momentum, follow through, and oftentimes leads to a quick, sharp break, which I think is in progress. I don't believe it's going to make new lows lower than the low of our bullish engulfing buy signal on November 15th, but there's a chance of that. So I'm turning away from bullish commentary and starting to talk about lack of follow-through, overbought conditions. Watch out. Miss Piggy's doing almost the exact opposite. Oversold third day today in a support area, not closing at the moment, looking like it's going to close below the previous lows, which also happened yesterday, but it didn't even make a lower low. The day before that, we did make a new low, and we did not close below the previous low, but it kept on coming down. I'm not saying that not closing below the previous low always causes rallies. There's nothing always in this business. It's always a matter of historically, are the odds high or low for various conditions. So this looks like it's about to bounce. And I'm continuing to monitor this one particular stock, SQ. I don't know what they do. I really don't care. But look at this bottom. It's a 2.5 years, really. Sideways, very sideways, horizontal, very, very horizontal trading range that has now had new highs in the last month and a half or so. Breakout, test support, made new highs, passed that test, came down to support again, bounced, and now a minor new low in the last day or two is still essentially at support. And all of a sudden we pop up today $4.50 on a $90 stock. So that's pretty decent. I don't like the gap. Gaps are almost always closed. It just did it in crude or whatever, natural gas. Sorry, natural gas. So I think it has a chance to come back to 87.50. And if it can't hold, then it's going to get down to its minimum objective on the small head and shoulder top I've outlined. Here's the neckline. This is the measuring stick, so to speak. And I'm looking for 82.37 on the downside, unless this is an upside breakaway gap and we're just starting a brand new big move up. And I'm not quite sure of that. We never got down to oversold conditions. We only got down to about 30. So I have to reserve a little bit of opinion here. I like the longer term situation, but basically the question is, in the next week or two, are we going to get down to 82.5 or not? And then if it does, I would expect it to bottom out and head north and make new highs up to 100 plus. And here we are back to the E-mini, high and last, doing a little bit better. I'm liking this. We're up 7 now. The spider is up 6, but that's delayed down a little bit. And we're up 69, new highs. Come on, E-mini, keep on going, baby. That's it. It's Friday. You guys have a great weekend and profitable trading to you. Well, I'll see if the Santa Claus Rally can come and make money on Monday. Bye bye. Profitable trading to you.